Friday, September 19th. The circus is back on. It's such fun. We had a Fed meeting this week. We have probably culminated a 3-week rise in long-term interest rates, which has partly to do with having gone down too far too fast, partly to do with the relaxation of tensions in the Middle East and in Ukraine, both at the same time. The rise also had to do, I think, deeply with expectations of what the Fed is going to do. And embedded in the Fed's post-meeting minutes are the individual forecasts for each member of the Federal Open Market Committee of where interest rates will go in the future. And these forecasts include the 12 regional Federal Reserve Bank presidents, half of whom are wingnuts. They are appointed not by Congress, confirmed not by Congress. They are appointed not by the President. They are appointed by local boards of directors who are not qualified to have opinions on monetary policy for the most part. It's interesting to Google the Federal Reserve Bank of Kansas City and see who it is who has put Ms. George in charge of the bank and what their qualifications are. In any event, the scattergram is in the newsletter next to this video, and the scattergram continues to show the Fed raising the overnight cost of money next year. Now, the Fed hasn't changed anything. They didn't change a thing this week, but time has passed, which means the scattergram is closer and closer to the present, and it makes especially long-term money antsy to think that the Fed is going to raise rates. Meanwhile, the economic data is on the slow side here. There's little evidence of acceleration that everyone has been looking for, including the Fed now, for 5 years. The U.S. economy is okay. It's just not accelerating. Overseas, everything is sliding. I mean, every single piece of it is sliding. There isn't a bright spot, which gives this astounding, I think unprecedented situation in which the American Federal Reserve, the American Central Bank, is on the threshold of raising interest rates, and the central banks everywhere else in the rest of the world are, if anything, tilting toward increased emergency ease, clear into just outright money printing, trying to rescue their economies from deflation. And where this goes, I don't have any idea. My job on Fridays is to try to have a firm grasp of the present. What is happening in the eyes of the market today? And today, the divide between the U.S. Fed and the U.S. economy and the rest of the world and the rest of the world's central banks in my long lifetime has never been farther apart. Best to all. Good weekend.